we are seeing markets in a very unusual and unprecedented situation. Markets are definitely not expected this type of situation where USD INR is facing one after another challenges. Even as market was steadying after the Fed moves to infuse a lot of liquidity and meet the dollar shortages globally, we have seen this in latest news of 21-day lockdown from the government, which has created more uncertainty for the economy, for the businesses, as well as for the USD INR. But I think markets and the general public are resigned to the fact that this is a necessity, and probably we will sail through this with this kind of measure, and later economy and the businesses will in due course bounce back with appropriate support from the government. So what we are expecting is good supportive measures from government and RBI, just like they are doing it in US. But it is still to be seen. We have no assurance, etc. Meantime, our view is purely based on technicals, and currently we are trading around 76.20 levels. We think that 76.50 is a big resistance for USD INR on a technical basis. But with any negative developments, it can easily go to 77.5 or 78. That's a possibility. But if it consolidates here, and if you see tapering of outflows from FIIs, we can actually see a retracement in USD INR by a rupee or so, maybe 74.5. उधर तक भी आ सकता है at the best case, or around 75.20 levels. So we are seeing a possibility, more possibility of consolidation here, but with worse news, it can go beyond 77 or 78, up to 78. My recommendation for exporters would be that hold your export hedges for the time being with the stop loss at 75.50, because the trend has not changed. So even if there is one knee-jerk reaction to any bad news, you will easily get one more rupee. So we are advising exporters to hold hedges. Keep a stop loss at 75.50. Once 75.50 breaks, you can go and hedge it. At the same time, if you have a new exposures which are costed at higher levels, those have to be hedged back to back, so that you are not stuck with a commitment which is at a higher level which you are not hedged. That is a strategy for exporters. Importers also, I think, need to be cautious about over hedging at these levels. At the same time, they have to manage their risk for next 1 to 2 months. Therefore, on minimum dips also, even if you have a dip of 60-70 paisa, ensure that 1 to 2 month exposures are covered. And even if you go to 77, 78, with markets having already gone so high within a short period of time, there is a possibility of a retracement. So importers will then again wait if it goes to higher level, not to commit at higher levels, but to wait for better levels to cover.